and welcome to this weekly Precious Metals Report with Andy SCHECTMAN. You can find his work at milesfranklin.com. Let's give him a big warm welcome back to the show. Andy, welcome back.
JC, good to see you. Crazy world we live in these days. Always good to get grounded and bring things back home with you. So thanks for having me again here today.
Well, thanks for being here, Andy. And as always, when you're here, you give us perspective on everything that's happening. And I absolutely love these conversations. And the main sentiment from the last couple of shows, everybody just enjoys our conversation, and most specifically, your sincerity. It shines through, sir. And so I wanted to say that here at the beginning of this show. And I really appreciate that as well. And that's why I have you on so often, because it's just so refreshing in this weird times that we live in to be able to have these sincere conversations.
Well, I appreciate that. That's the best compliment I can hear. And thank you. That's, I'm not a genius, but I try to be sincere and help as many people as I can. And that's why I'm honored to be associated with you, because I feel the exact same way about you as someone who's doing what you can to help people and spread the word. And so for what it's worth, thank you. I appreciate that.
You're welcome. Thank you so much, everyone, for joining us on this quick live interactive broadcast. We're going to give you a few updates today on both what's happening in the market. We're going to also talk about inflation and some upcoming developments here at Miles Franklin and the way we are going to fill your orders. We've got some exciting news for you on that as well. So first, let's start with this, Andy. In the last couple of days here, we've seen this gold and silver flash crash. Now, if everything was normal in the world and we would see these flash crashes of gold or silver, one might think, oh, we just found this huge mine, as Bix Weir talks about. There's tons in gold in the Grand Canyon, and this is why the price is plummeting all of a sudden. But of course, that did not happen in the mainstream news. So what's going on with this flash crash here in the last couple of days, in your view?
Oh, there's really nothing to view. It's just a bunch of crap. Let me take you back first to kind of lay the narrative, and then tell you what happened. So we go back to February 1st, the end of January, when we saw the silver smash. In that environment, we had a silver price going to $30. We had more silver being pumped into SLV than in the history of its existence. We had an environment where I was working literally 20 hours a day those last few days, right as the Wall Street Silver Group came on the scene, and 500, 600, 700 emails a day, and 200, 300, 400 calls to me personally, not even to the rest of my brokers in my company. And it was extraordinary time, to the point where in the 31 years I've done this, I never thought I would see an environment that would be like this. It was truly extraordinary. That Friday night, typically on Fridays, and this will lead into what I'm talking about here today. To answer your question succinctly, I just want to lay the background for people who may not know how this all works. The market sleeps at Friday night Eastern time, like at 6 o'clock, and then maybe even 5:30, and then it wakes back up Sunday Eastern at 6 o'clock. And during that period of time, it sleeps. The rest of the time, it circles the globe, and there are brief periods where it's not really traded actively, but it's open 24 hours a day. So on a Friday afternoon, my trader every Friday, my head trader, will call me up and say, hey, are you doing a show with JC? Or are you doing any of these shows this week? Anything I need to know about so that I can get long, buy some futures contracts into the weekend so that whatever we sell is hedged, right?
Right.
Because all of our inventory is hedged. So if I own 5,000 ounces of gold in the warehouse, I will sell 5,000 ounces on paper. And if what in my warehouse goes down, it goes up commensurate on what I sold short. I'm market neutral always to the price swings. But how do you do that over the weekend when the market's closed, right? So what we do is we'll take a long position open into the weekend so that we can fill those orders and they then become hedged. So that Friday, as things were starting to heat up, my trader asked me, what can we do? What should we do? I said, I think 11 contracts probably is a good idea. That's 55,000 ounces of silver. later that evening, as I'm going call after call after call after call after call, I mean, literally, like right out of a movie, right? I get a call from someone probably around 8 o'clock at night. He says, dude, do you see what's going on online? All the online companies are shut down. They're out of product. And it looked that way from an outward perspective. Even when I glanced at it, I'm like, yeah, it looks that way, doesn't it? But here's what happened. None of them were prepared, just like we weren't, because I said, keep it open. We're all right. Let's keep going. Saturday morning, I get a call at 5:30 in the morning from my trader, frantic. So this is 4:30 in the morning in the Midwest.
He's like, Houston, we have a problem.
Yeah, he says, dude, we sold 90,000 ounces of silver since last night. You're 35,000 ounces naked exposed to the open. And I said, shut it down. So for the first time in 31 years, we had to shut down because the volume was so extraordinary, right? Yeah. You couldn't ask for a better situation if you're long silver and had expectations of it going long, and you see it plowing into SLV. All the online dealers are shut down. We shut down, selling weeks worth of silver in a few hours. I mean, everyone was, right? So that Sunday night, before we open back up, in the access market, this is a period of time in between when London closes and New York opens. It's just this little sliver of time as it moves westward towards New York. Somebody dumped 1.5 billion ounces of silver onto the market. That's 2 years nearly worth of global market supply, like that. Now, in that environment, that trader would be fired, hunted down, and shot, and maybe not in that order, right? We've talked about this before, but this is how they do things in a way to specifically create an effect. Right. And realizing that most people never look under the hood. If you look at a lot of the articles that talk about the crash, it's all crap. It's all, oh, well, you know, expectations and the bond market doesn't see inflation, you know, whatever. It's all crap, right? Because what really happened is someone dumped all this silver in the middle of the night and no one was there to take the other side of the trade. It is the worst possible execution that you could ever get. And it dropped the price down by $4. So let's take a look at what happened here Sunday night. And, you know, it's important to note that Sunday evening, right? Opening hours in COMEX trading, you know, before you get to that open, you're talking the thinnest, most illiquid time relative to Monday through Friday, when trading is robust and everyone's there trading. And, you know, additionally, you had, this is August, you have the holidays in Europe, and this particular weekend, you had Asian markets in Singapore and parts of China, I believe, were closed. It was a national holiday, an Independence Day. And so even in Japan, I think also. And so you had virtually no one there to take the other side of the trade. And so you're talking a period of time where no one should be selling anything at this time. So in that atmosphere, in that moment where no one's there, after London closes, before New York opens, somebody dumped 24,000 gold contracts, $4 billion worth of gold were dumped suddenly onto the market. And this was done specifically to nuke the price. You know, there would be no reason why someone would sell thousands and thousands of December 21 futures contracts at that point. It would have been done specifically to drive down the price. Anyone who was trying to maximize a return on a trade of that size would bleed it out over days, maybe even weeks. You do not dump 2 million ounces of gold at a period of time when the whole market is sleeping. It is done specifically for effect. It's like a currency intervention. Right. And so when we talk about this flash crash, it had nothing to do with physical demand. In fact, Monday and yesterday were probably the two busiest days I would say this entire industry has had. I know we did, and I know everyone else is the same, and all the big companies. The biggest, the craziest it's been since February. We didn't sell 1 ounce. No one sold us 1 ounce, to the point where I was up till 4:30 in the morning the other night. And I'm sure some of your listeners got emails from me. In the middle of the night, I had 600 or 700 emails on Monday. And so we're talking massive demand. And so what I'd like to say about this atmosphere is that thanks to guys like you and Cliff and Bix and Chris Marcus and Silver Wall Street guys, or Wall Street Reddit guys, Wall Street Silver, sorry, and all the other people who are out there telling the truth. Yeah. 2020 to me and also 2021 has been, if I talk about a mainstream, I would say it's been to some regards a renaissance, an awakening of sorts. And so this little tiny ball of people has turned into a pumpkin or a big beach ball. It's not the little tiny marble anymore. There are a lot of people, but that's still very few in comparison to the mainstream, right? In fact, Rick Rule often talks about a cumulative investment from the Harvard Endowment Fund all the way down to Joe Sixpack in the United States being 0.5% of 1%. Now, I might argue it's grown maybe 1% in terms of total investment in metals. Maybe we're not even there yet. I don't know. But the point is that the expansion of the hard asset people is substantial. And so when you see an article in Bloomberg that's just total crap, that doesn't talk about anything that had anything to do with someone dumping this stuff in the middle of the night, they cite all these stupid things to deflect and misdirect the no-look pass. People are looking at this stupid analogy from Bloomberg or from Yahoo Finance or any of these mainstream publications. They don't even say that some idiot dumped $4 billion worth of gold in the thinnest trading possible. Even the rhetoric coming out of the mainstream is such that the mainstream doesn't catch on, and they say, oh, well, look at that shit. The price gets clobbered. Why would I buy it? We'll go buy the 10-year treasuries, which people keep buying, or some entity. Maybe it's the Fed, the stupidest thing in the world when you got interest rates that in real terms negative and 1% return on the 10-year treasury. Who the hell's buying those in terms of safety? Because they're looking at gold getting clobbered when it should be going up, and maybe they're looking the other way. But the big ball of people that seems to be growing, the hard asset people, they're wise to this. Mm-hmm. And what happened? Well, no one sold an ounce, and they're continuing to buy. They look at this as a subsidy. And I'll tell you something, in my heart of hearts, I believe this was done not only for effect, but I think there was a good deal of short covering involved also. You see, the price of gold was hovering right at the 200-day moving average, which is the delineation in technical terms typically. Now, there are other factors, but typically the 200-day moving average is the delineation between bull and bear. You fall below the 200 and you have, the right volume and that kind of stuff and momentum, you're in the bear territory. You come up through the 200 with the proper momentum, you are now in bull territory. So it's hovering right at the 200. So what do? They sell 2 million contracts, and each contract's 100 ounces. So you're talking a ton of gold, right? And so anyways, bottom line is that what happens is that the price drops below the 200-day. And then it starts to trigger sell orders, non-emotional, black box, algorithmic sell orders that run a good portion of the Wall Street funds, right? So by the time these guys get into work, they've already been traded out of their position, and it snowballs. And they don't have to drop it all the way down. They just have to get it going down the hill, and it gathers. A snowball turns into a giant.
The algos to work. Yeah.
When it hits New York, it pops up $40. And it didn't get back above that, but that is short covering where someone knocks the hell out of it. It drops down to as low as 1,600 and change and 22 and change on silver, and it pops up. That's big banks covering their ass on their old short positions. It reeks of desperation. When you're doing something in broad daylight, when you're mugging someone on the sidewalk in broad daylight, you don't care. It reeks of desperation. And that's what's going on right now, to the point where a lot of the people who are new to this might be a little freaked out. Those of us who've been around this game long enough understand this is a subsidy. This is a buying opportunity, because you're still seeing the massive buying by the big money, the massive takeoff of COMEX and the drawdown of the available stock on COMEX is enough for me to understand that the big money is using these manipulative prices to continue to add to their positions, while at the same time, you're seeing the rhetoric from the mainstream paper this over as something that it isn't, that, well, interest rates are falling and inflation is transitory. The bond market doesn't see this as a problem. Things are getting better. But if things are getting better, why the hell is the Fed continuing to spend $150 billion a month on asset purchases? And why is their balance sheet continue to expand to $9 trillion? The point of it is that the rationale and the impetus to buy gold has never been stronger, and silver, ever. And I think they're freaked out by it. And, you know, the only way, JC, that you can really manipulate a market over time is to push it in the direction that it is going. Because, look, in an environment where the price falls that much, by almost $100 overnight, you would think everyone is selling. And instead of the 600 emails and the gazillion phone calls and all the orders that we placed on Monday and on Friday when it kind of started, not one person sold an ounce. In fact, every one of them are bargain hunting. So for all of you out there, in these environments, you have to have strong fingertips. You got to trust your gut. And all I can tell you is that there's no one in the United States that ran to sell their metal. In fact, just about everyone I talked to was thrilled that they could cost average and accumulate on the cheap because they know it's crap. And it is crap, evidenced by the fact that there is not one real trader on the planet that would ever do that without it being done specifically to lose money and to create effect. And if you look at the sequence of trades, you can see that they sold, I don't know the number, I read it earlier, a whole bunch of contracts at this time. And then about 3 minutes later, they sold twice as many contracts at about $9 lower. And then 10 minutes later, they sold a ton of contracts at this much lower. They were doing it specifically to drive down the price. And so the flash crash, full of crap, absolutely. Does it change a darn thing? No, in fact, it reeks of desperation. So look at this as a buying opportunity, as a subsidy and gift, because if these people weren't doing what they were doing or are doing, price of gold and silver would be exponentially higher. And I can assure you that, based upon the volume of demand that we see in the retail industry and just the rationale to buy it in a world that's gone mad.
Absolutely. Okay, you just spoke of desperation. So I want to bring this back to the audience here. Now, part of the reason you were so busy earlier this week is because of this guy here on the screen. He tends to draw a big audience here, and we had this amazing conversation. And in this particular one, I won't read what's in red here. We did also talk about this desperation timeline. Now, Cliff had forecasted this way back, I believe, in February, that we would eventually be in this desperation timeline by May, June, July, August period. And we're in this now. We're at the crux of it, and we're actually past or at the tipping point, or if not past the tipping point now. So folks, if you haven't seen that episode, please do go and check that out. You're looking for Beyond Alta with Cliff Hyde. You can find that at beyondmystic.net/pay-per-view. Now, the desperation is interesting because, of course, on one hand, we're seeing CNN and all these major newscasters go to these town hall meetings where Mr. B is there, and they're doing everything they can to explain to the audience that no, there's absolutely no inflation, and in fact, this $3.5 trillion package that he's trying to pass now is, of course, not going to stoke inflation either. Don't worry, folks, it's not a problem. I'll get back to that on a second here. You and I touched on that last week, but first, I want to talk about the desperation and how absolutely incredible it is for people watching this. On the same hand, we've had the U.S. Mint last month admit that there's this world silver shortage. We had months and months of some of these mines being closed down because of the supposed health issues going around the planet. So production has not increased. We have all of these shortages. We have these plants around the world who are trying to create and produce these vehicles who can't do that because they don't have the microchips, potentially because they're missing the silver to put into them. And yet we're seeing these flash crashes here, as you just said, that are absolutely mind-boggling. So let's talk about that just for now. The supply. Has anything changed recently? Have we seen new mines open up? Have we seen mines decided finally to invest in some of that deeper ore? Or are we at that same standstill where mines are saying, hey, this is too low of a cost. Right now we're on idle, or we're just scratching the surface to the high quality ore, and that's the best we're going to do. What's happening at the mine level right now?
I don't think we're seeing, look, most of the mining companies don't have the luxury of withholding their supply like Keith Neumeyer does, and like there's another, what's it called? It was First Majestic and Endeavor Silver. There are the two of them that have had the courage and the wherewithal to be able to hold back production. Most of the mining companies don't have that luxury. That, you know, a lot of them are bootstrapping. A lot of them are, you know, it's a labor intensive, it's an expensive industry, and so they don't have the ability to do that. Plus, they have to be, you know, cognizant of their shareholders, and it's an age old question: why the hell don't the miners just revolt? And you know, I give kudos to a guy like Keith Neumeyer, who is a friend, and I have great respect. Now, Keith, the reason he does what he does is because he's a businessman. He's not a geologist. He understands it. Most of the mining executives are geologists, and they're more interested in digging holes and finding ore and bringing it to market. Irrespective of what's happening with the futures price, they just don't have the luxury to be able to do it. But no, when we talk about silver and mine supply, look, for the past 2 years, it's been declining to the point where we have nearly 500 million ounces shortfall over the last 2 years combined, between 200 and 300 million ounces between supply and demand. And this comes before the Green New Deal and all of the new applications that that you need silver for in electronics and in solar and in battery. We've often talked about the Chinese Road and Belt Road Initiative, where you're connecting 70% of human population between Asia and Africa, the biggest infrastructure deal ever attempted. That's digitally connecting them also. The need for silver globally is increasing exponentially while the supply is decreasing. And it's important to rehash once in a while when we talk about the silver miners. Look, only 30%, 30, of all of the silver that comes to market comes from primary silver miners. Two of the biggest ones, Endeavor and First Majestic, have the courage and the wherewithal to stand up and withhold a little bit of production. But 70% of the 800 million ounces that have come to market the last few years, 550, 60 million ounces, comes from other miners who are mining other metals. They're not silver miners. They're mining copper or zinc or gold or lead or whatever they're mining. Oh, look, we found some silver. And so you end up with literally 2.5 times the amount of silver that is available comes from people who don't have the incentive to stand up and say, no, we're not going to deliver this silver. It's a cash-strapped business. So when you realize that not only is it depleted in nature in a big way, and if you look at the curve, and it's a bell curve, it's heading down in terms of supply, you have a very small percentage of what comes to market, primary silver miners. And so when we talk about has there been any big deposits? No. In fact, silver is found in nature in a form called epithermal, which means it's very close to the surface. And sometimes in big silver mines, you just see it laying on the ground right there. So you can see it through the rubble. And so the big deposits were found decades ago, JC, long before the advent of advanced screening and imaging. Right. So no, in fact, we're going the opposite direction, which is part of the reason that I think they are so desperate to keep everyone from running to it. You see, the silver, in terms of its market cap, is the pimple on the ass of the elephant. It's a tiny little market. And so if everyone were to realize just how amazing silver is, because think of it this way, what other asset is bracketed on both sides between industrial and monetary demand? There really isn't anything else that has that kind of demand on both sides. It's usually one or the other, like gold is monetary, copper is industrial. Silver has a massive and expanding industrial use base and a renaissance globally in its monetary base. So you have demand that ultimately, I think, will create a war where industrial will start fighting with the hedge funds because they both need to get it. They need to get it, and this is why silver is called inelastic, at least in terms of industrial. You need it, no matter if it's a tiny little piece for your iPhone, you need it. So you have to start securing supply, which ought to, as it starts to drain physical stocks of supply, it's going to start to push the price up. And when you look at an asset that is priced 50% of its 1980 peak, for people not to realize the true value in something that is massively needed, is depleted in nature, is coming out of the ground at 7-to-1, but priced at 72-to-1, it's probably the best environment, literally, in terms of a setup or a backdrop, or fundamentally, in terms of an investment, it's the buying opportunity of a generation. And this is exactly why they're smacking the crap out of it, because it's also the canary in the gold mine, and the silver mine in this case, in that it speaks to the frailty of the US dollar. It speaks to the illusion that that these low interest rates are paying tribute to. Right now, interest rates should not be where they are. They should be way higher, because at some point our creditors are going to start to have to realize, hey, we need compensation for what's happening, the evisceration of the dollar, losing such crazy amount of purchasing power year over year. This year, just based upon their stupid measurements, we're probably closer to 7% if you look at the entire year on inflation. And we've talked about before, our friend John Williams is saying it's twice that at 13%. Yeah. And so if inflation's running at 13%, but you're compensated at 1.3% for US Treasuries, at what point does the dollar really start to take it on the chin? And so when you look at the popular narrative coming out of the mainstream, none of this is brought up. And so, look, it's one of these deals. It sucks if you own it. It's a gift if you're accumulating it. But take a step back and say, why the hell would anyone do this? Why the hell would anyone do this? And it's specifically for effect. And I would also argue to short cover. And I would also argue the biggest money in the world looks at this as going in to buy something that they want at the store, and it's massively on sale. So let's load up. I'm not saying that people need to follow what I'm saying and start loading up on gold and silver. All I can simply tell you is that it is a subsidy based upon the supply-demand fundamentals, based upon so many metrics that would scream this is the greatest thing in the world to be accumulating. They don't want that to happen because it speaks to the frailty of the US dollar, which is something they're trying vehemently to control.
And the same, by the same token, though, they're saying that, but in person, they are taking physical possession of their silver and gold at the most rapid clip we've ever seen in history.
Over 200 million ounces already, which that's several years worth of deliveries off of COMEX. And that's what we know of. You got the exchange for physical off of the London Metals Exchange, and you got the big commercial banks backdooring silver and gold out of the ETFs. They're the ones who can pull it out. In that example I gave you in February, you had $30 silver. Then the price gets slammed down to 26, and over the next 90 days, Goldman Sachs and a few other commercial banks took 90 million ounces of physical out of SLV. But the interesting thing about it is the night before it got smashed, what did they say? They changed the prospectus, and they said, well, we may issue more shares than there is silver in the trust. So they issue all these shares backed by nothing but air, and then they drive the price down, and then they pull the real silver out. So they sold air at 30 and pulled real silver out at 26. The big money is using the cover of these manipulated prices to corner the physical supply. And the narrative that their friends, their brethren at the mainstream media is giving us is completely 90 degrees or 180 degrees rather away from what they should be focusing on. And then when guys like you and everyone else tries to tell the truth, half of them get censored. So, you know, it's no wonder that we're a pimple on the ass of the elephant. If everyone knew the truth, they would run through that revolving door so fast that the door would slam up and it would be over. There'd be nothing left. And that's what they're trying to avoid, not only to maintain the illusion of strength in the world reserve currency, but also because big money interest is to accumulate as much gold and silver as they can in preparation for what's coming. You know, the SDRs that just got released, everything is pointing to the dollar's in trouble, and they're trying to forestall that seminal event, crossing that Rubicon where there's no going back. They're trying to keep everyone from realizing that before it's just impossible to not realize it.
There are some cracks in the mainstream media. I'm going to show you an article that was posted by David Morgan here maybe last week. But before I do that, Kay on the screen is saying, "Hey Cliff, I love your woos." Okay, so Andy has just laid down the track here of all the fundamentals you need to pay attention. But it wouldn't be Beyond Mystic if we wouldn't do also some of the woo. So in this episode with Cliff, we did talk about entering the sci-fi world, and that entitled also Disclosure and things about space aliens, and eventually that technology coming to bear here for the rest of humanity. And in that, the big requirement is silver. So let me play a quick clip. It's about maybe 2 minutes in here from this interview, so you guys have a taste of what that's all about, and then I'll get back to you here, Andy.
No worries.
That slavery. We just saw David Morgan tweeted this a couple of days ago, this newspaper suggesting that people buy physical silver here to hedge against inflation. I was like, wow, in a mainstream national newspaper, wow, that's not a bit rock anymore. Let's talk about that. And also, I want to get into the woo, because we promised here to talk about the space aliens, their role in all of this. You just talked about Karl Marx, but talk about the mantids here and how all of that is playing. There's another player in all of this here when we're talking about this fog of woo. So let's start first with silver. This is a means of preparation, of course, of hedging our bets against all of this inflation, but there's more to that as well. So let's speak to the audience.
This stuff is so deep. Normies are going to freak out, dude. I mean, silver is a spiritual metal. It's bound to the moon. We use it as humans to bind time. Do you know we're the only animal that you can clearly say is time binding in its nature, which affects our mind, and it also affects the nature of time. So this stuff gets really deep.
Okay, maybe for another episode.
Another episode, right.
Well, let's keep it to the core of maybe using silver here at some point in this new economy that is not a debt slave system. Maybe.
Correct. Okay, so cryptos and silver and gold are our way out. I'm actually of the opinion that we'll transact in gold. There's just so much of the stuff lying around, right? Yeah. And Nick Weir is quite correct. You know, they even call him Glix in the comic books. So you know that they know that he knows that he's accurate. Anyway, though, so yeah. I think we'll transact in gold, and that that people will be begging us to surrender our silver, because it will be so valuable in the sci-fi world, economically or industrially. Right. And then we'll just use silver as we go forward. Silver will not be monetary per se, but those people that were fortunate enough to buy silver at this time will be able to bequeath, and they don't sell, will be able to bequeath silver to their children and so on, and it will become so valuable that we'll at some point we'll actually probably strip silver off of silverware, that kind of thing, because it will be so valuable, and people will try and recover it out of landfills where they used to dump remains from film processing and stuff. Right.
Old cell phones and stuff.
Right, but it's not going to be transacted. So initially in the chaos, you'll maybe trade in silver dimes and stuff. That over this next period, as the money system breaks down, because bear in mind, the money system is owned by the cabal, right? And so it's got to go. We've got to get rid of that. I think
I'm just gonna clip it there there might be some words there that will get us in trouble here. So folks, that was a part of that last episode with Cliff High, so go check that out. But Andy, what are your thoughts on that? On top of all of the fundamentals, as we move into two things: one, this new space age economy, and two, this idea of being out from underneath this debt slaves system. What are your thoughts on that?
Well, if you think about it, where else do you put your money that gets you out of the matrix? There are a lot of people who will say crypto, and I know Jay Crypto is in here, and I've had the luxury of talking to him and some of his friends, and I'm not going to even pretend that I understand crypto, because I don't. I have just a cursory understanding of it. But to me, where else do you go? I mean, getting out of cryptos to me is the part that I can't wrap my head around. I see the virtue and the value in owning it. But where do you go? They used to go to bonds. Can't do that anymore. Where do you put your money to get out of the matrix? And Cliff is right. Silver is depleting in nature. In fact, there was a branch of the U.S. government a few years ago who came out, and they're like the geological branch of the U.S. government. I don't even know what the name is, but they came out.
USGS?
Yeah, something like that. Yes, and they said that they believed that silver would be the first element struck from the periodic table. So look, it is depleted. It is much more rare than gold. It does have so many uses that gold doesn't. That is needed in industry and in an increasing way. I think it's true that, you know, it's important to look at gold and silver not as an investment, but as wealth, and wealth that has lasted the test of time. And I think we're getting very close to the end of this Keynesian-based system where, you know, currency is going to be a pariah. No one's going to want it. It will be a hot potato. And so, yeah, like he said, at first we'll be trading perhaps in silver dimes, but when the realization comes that just how valuable it is and how depleted it is and what it really does represent, absolutely, the sky's the limit. You know, how high can it go? I don't know, but I will tell you this. One of the only things that I know for sure in 31 years in this industry is that markets go higher than anyone ever think possible, and bear markets fall further than anyone thinks possible. When I started in this industry, the Japanese Nikkei was almost 40,000. The Dow Jones was 2,100. Look at where they both are now in an interest rate environment near zero in Japan. They still can't get back up 40 years later to where they were. And here in the US, no one would have ever thought we'd see a 15-fold increase in the Dow. When you talk about silver, the fundamentals behind it would scream that, you know, a 1-to-1 ratio like Bix talks about, and even above that, where silver is actually valued above gold. Now, for most people, that seems impossible when you look at the geologic relationship and the need for it, from military all the way down to water purification and everything in between. Yeah, I think it's very likely. And then when you add the monetary aspect of a currency system that's lost its mind, where 40% of every dollar ever created in the United States was created last year, 2020. And now with the infrastructure program and the $3.5 trillion bill that's supposed to follow, it's modern monetary theory to the nth degree. It's basic universal income. It's more stimulus. It's more and more printing. The value of the dollar is being destroyed right in front of all of us. And when you look for places to put it, there is nothing other than gold and silver that have the history, a 5,000 plus year history of being accepted globally as wealth. And when all shit hits the fan, JC, I truly do believe people on a broad scale will recognize it for what it is. And it is for this reason that you have seen the central banks do what they have been doing by accumulating, and the commercial banks and the sovereign wealth funds by accumulating where? Ahead of the curve, ahead of the crowd. And it is always about the problem that we face as a society is that we believe our eyes tell us the truth. And we believe that everyone is being straightforward in their admissions. But the thing of it is, I often talk about the book, The Art of War, which is a book centered on misdirection and how to beat your opponent without throwing a punch. And it's taught in every major business school. It's taught in every major law school. It's mandatory reading at CIA. It's mandatory reading at West Point. The point of it is that it is very pervasive. That is misdirection. And we are being misdirected by everybody except all us small alternative media people who are showing the virtues and the importance of protecting ourselves with something like gold and silver. And I want anyone, let's take cryptos out of the equation, because I'm not smart enough in the crypto sphere to debate it. But where else do you put your money? You can't put it in real estate. You can't put it in fixed income. You can't put it in securities. Where are you going to put it? And you put it in a safe, a money market or a savings account. You can be bailed in and you can be gated in. They've closed all of the avenues. So when you see a flash crash in metals, it's because of that, because they know that there are very few places to go but that. So they want to delink the rationale people would have for even thinking about that. I think Cliff is right. I think it'll go higher than anyone thinks possible.
Well,
And
in his WebBot data reports from a couple of years ago, I believe it was the Bare Naked Wells, but also maybe in some of the old Alta reports, I believe he had also seen what Bix was alluding to, maybe the one-to-one parity with gold, and maybe even surpassing a gold. That's a little bit further out, maybe in this desperation timeline we are tracking, and all of these temporal markers we're tracking. But what's coming up relatively soon here is another temporal marker that we're waiting to hit. We had the $64,000 Bitcoin temporal marker hit this year. And in those past Alta reports, in conjunction with that $68,000 Bitcoin and the retracement by half, which has just happened, we also had another temporal marker for $600 silver before Christmas in that same year. So we're at that time point now. So guys, fascinating times to be alive.
Let me just add one point to that real quick.
Okay.
If you just simply take the price of gold right now and divide it by the ratio in which it's coming out of the ground at, it should be north of 250 bucks. So is 600 that outrageous to say in a world where the currencies are being eviscerated and destroyed? No, hell no, it's not.
No.
It may sound that way. Just like the first person that I saw speak at a conference in 1989 said the Dow Jones would go to 10,000 when it was 2,100. He was laughed off the stage. I remember it. Literally booed and laughed off the stage. Mm-hmm. Where is he now? He's laughing at everyone else. And so the point is that, I don't think Cliff just pulls his stuff out of his rear end. I think there's a lot of thought and mathematics and logic goes behind what he's saying on top of all of the other things that go into his projections. And if you just simply divided the cost of the price of silver, gold, by what it's coming out of the ground at, according to Keith Newmeyer, it's coming out of the ground at 7-1 globally. Right. And so divide it by 7, you get over 250 bucks. And so to see it, say it could go to 600 would be the same thing as saying that gold could go to 3,600. You got Bank of America saying it's going to go to 3,000 already. It's not outrageous. It's not. It's totally legit.
And Jim St. Clair, Mr. Gold, of course, when he's doing the same math he did back in the 80s to forecast that famous forecast of his, he's looking at even now, and this was maybe months ago before all of these trillions that were printed in the last couple of weeks and months here, he was looking at $96,000 gold to equate for all the money printing since then. So imagine what silver would be if we had the $94,000 or $96,000 price per ounce of gold. So it's not crazy at all, guys. It looks that way, but really, things like this have happened in the past, and people were bitching about this when gold was 35, and then suddenly it was 800 bucks. So we are at that point now. Andy, okay, you guys have been really busy this week, in part because of this Cliff High episode here. What do you have for the audience in terms of updates? Have you been able to keep track here of all of these booking requests coming through our website? What can you tell the audience? And also, what can you tell our Canadian subscribers here as a new service is coming online with you guys here very soon?
Okay, first of all, it's interesting. So all of your leads come through your website and come to me. 1 out of every 4 or 5 go to my spam box. Now, I check my spam box 5 times a day because literally I have like 100 emails in there 5 times a day. I'll go through each and every one.
Right.
And 1 out of 5, 20% come into my my spam. And I don't know if it's a word or a phrase that someone is saying in the notes section. I don't know what does it. So I will tell you that I have 2 or 3 brokers that I send all of these leads to. All 3 of them are 3 of my oldest friends since elementary school and junior high school. And I'm talking 30, 40-year-old friends that my whole company, everyone who works for me, just about everyone is like family to me. They are all my friends that go back to when I was a child. And except there are a few that were friends with my father for the last 50 years. So we have brokers who are family to me, and I send them the ones that I don't, because I'm getting so many, I can't work them all myself promptly enough. So I send them these guys, and they rattle them off. So I would like people to, after they send it off, if you don't have something within 24 hours, please email me at andy@milesfranklin.com, and I will get to the bottom of it. And secondly, check your spam box, because that does happen. And I think maybe when we send it back, there's just the same likelihood of going. In fact, I spoke with one of your listeners who told me, hey, I'm so sorry. I told you in JC I didn't get it, but it was actually in my spam box.
Right.
No worries. So that's one thing. Also, to your Canadian subscribers and listeners, the way that we have it right now, we have a very robust program in Canada with Brinks in Montreal, Toronto, Vancouver. We do a lot of stuff in Canada, and we've made a lot of wonderful relationships, not only with the Royal Canadian Mint and to some of the biggest distributors in Canada that work on behalf of the RCM. Up until now, when they email us from Canada, we have to receive money in US dollars. The conversion of Canadian dollars to US dollars and the wire fee is a deal killer in a lot of cases. So what I have done is to reach out to a very good friend of mine in Canada. I'm not going to mention the name yet, but I told you who it is, and they are very, very high on the food chain. And they have agreed to partner with us. We're going to actually clone a website, their website, and offer to your Canadian listeners within the next couple of weeks the ability to purchase these specials, and from us in Canadian dollars. We'll make sure that your listeners are getting the best price in North America directly from within Canada, without having to convert to dollars, without having to send us a wire. They can even send a check if they want in Canadian dollars. It will all be very, very seamless.
Oh, perfect.
Because on anything that's really not bigger than $5,000 or $10,000, it's going to be cost prohibitive for them to send us a wire. The conversion and the wire fee, and then the shipping across the border makes it very difficult cost-wise on smaller orders.
Right.
So I've addressed it, and that is coming. It's already been agreed upon this morning. We shook hands virtually, awesome. And we will be implementing that as
well. That's great news. And what does that also mean for the shipping? Will those Canadian customers now receive shipping directly from within Canada?
Yes.
I get that they pay yes. Okay, great.
It will be coming either from somewhere in BC or the Royal Canadian Mint in Ottawa, or maybe from one of our depositories, probably in Toronto. So we got the whole country covered. Okay. And it will be as quickly as we can get the website up and running, we will. I will try, and maybe even as soon as next week or the week after, get the bank account and all that stuff set up so that even before the website is done, we can just start servicing immediately. It's something that's been very important to me. And I realized just in the 40 or 50 Canadian customers who wanted to do business over the last few days, that there's a problem, that it becomes too costly. So I want to make sure that your listeners are getting the best price no matter where they are. Awesome. Especially since you're talking to us from Canada. There's no reason for us not to be able to service those people, not just here in the United States. So that's exciting. I'm sorry?
I'm excited for that. Thank you.
Yeah, and as am I. And the special that we're running this week is a resumption of the one that we ran last week. Because we bought so many of these coins, and the special has been great on the Kangaroos and the Britannias, and we will add the 2021 Austrian Vienna Philharmonic to the equation also. Just trying to offer your listeners the choices, some variety. Look, there's 6 major mints in the world. Anything you buy from the 6 major mints is synonymous with quality and liquidity. You got 3 of them right there in Austria, in the United Kingdom, and Australia. The other 3 would be South Africa. We have Krugerrands. Would be the Maple Leaf. Canada, we have those. And would also be the United States Eagle. I am one of only 27 companies in the world that the United States Mint has ever approved to resell their product to the public as an authorized reseller. And I will tell you that for the last 18 months, the Silver Eagle has been too expensive. I love them. They're wonderful coins, but in comparison to these and the Maple Leaf and the Krugerrand, it's not cost effective. So whatever your listeners want, we'll make sure that they get the best price. These 3 right here probably represent the best value right now. So we have other things too, like 10-ounce silver bars at $2.50 over the price of silver. It should be as good as anywhere in the country. in North America. So we're trying real hard to bring value to your listeners. And this will really be accentuated over the next few weeks as we open up the ability for your Canadian listeners to be able to send a check or a wire in Canadian dollars and receive the product without having it to ship across the border.
Awesome. Well, thank you so much. And folks, give those a try there. Beautiful specials here again this week. And the question on the screen here too, I was asking Andy the same thing. I'm excited to eventually get the opportunity to create a BeyondMystic silver coin. And now Andy is getting equipped to be able to do that, both with coins and I believe also 10-ounce bars.
10 kilo bars. We'll have that machine up and running probably by September 1st, maybe, or right around there. It's being shipped to us. It's the same exact machinery that the Pamp Swiss Mint uses. High quality, incredible machine. And it'll make 10 and kilo bars that we can design. So the BeyondMystic or the Woo Woo or whatever that you want, or Cliff wanted, or Bix wanted, we'll make those bars. The second piece of machinery that we are ordering that will be here sometime in the fourth quarter are the rounds. We're going to make rounds also, which is a much more, there's more that goes involved into making the rounds and the bars. Don't ask me why, but this is what I've been told. But we're going down that road as well. And we're doing that because I'm more concerned about the availability of refined product going forward than just about anything else. If people were to go back and listen to a lot of things I've said over the last year, a central theme has been that I believe the market will ultimately be defined by its inability to source product readily and efficiently. So that's why we're spending the money to go out and buy these machines. It's much easier for me, I think, in that environment to get silver shot or recycle silver. We already have a smelter. We take in silver flatware and all that kind of stuff, 1,000-ounce bars, whatever that we have, to create them and or to melt them down and make silver bars and rounds. So that's coming too, and you'll be the first one that we make, the BeyondMystic bar, and I can't wait to be able to offer that to your listeners as well.
I'm excited because a lot of people have been asking for a long time, and I just never knew where to start with that. And of course, I'm always busy, so being able to partner with people I trust to make this happen for me in the back end is absolutely a great strategy for me. So I'm looking forward for that, and I'm sure a lot of the audience members are as well. Andy, holy crap! Time flies when we're together. We're already at the hour mark here. Any last words for the audience here in terms of maybe living through the next couple of days or weeks of turmoil we have here, and maybe staying out of that fear frequency and to empower themselves with some knowledge?
You said it better than I could. And I would just simply say, sometimes you have to have strong fingertips. Sometimes being successful is just hanging on long enough to see it through, to be there when things change. And, I think you have to kind of turn your emotions off a little bit. Mm-hmm. It's easier said than done. It's easy to get emotional, and don't be logical and understand that what is happening isn't logical, and that what is happening are desperate acts by desperate entities, desperate governments, desperate commercial banks, desperate exchanges. The handwriting is on the wall. Hang tough. See this through. Don't buy metals as an investment. They will perform as one. It's not an investment. It's all right. What Jay says right there, Jay has made money investing in cryptos. Other people have made money investing in equities or investing in real estate. Precious metals to me is not an investment. It's wealth, and it's been wealth for 5,000 or 6,000 years. That's the way to look at it. And yeah, it sucks when your wealth decreases a little bit, but when that happens, look at it as an opportunity to add a little more wealth at subsidized prices, because that's the way the big money has looked at it. And that's the way the big money is trading with it. When they knock it down, they keep buying more and pulling it off the exchanges. So trust your gut, have strong fingertips, and if you have to, shut your computer off for a few days and come back next week and let's see where it is. But don't make any rash decisions.
Right. And as we are unveiling all of these financial crimes around the world, and here there's this trial going on here, and the guy in white there is getting... I won't even say it here on the screen, but I'll read this famous quote by Denis Diderot. Man will never be free until the last king is strangled with the entrails of the last priest. So on that note, folks, that was the weekly Precious Metals report with Andy Schechtman. Join us again next Thursday at 3 p.m. Eastern for the follow-up show. Thank you so much for joining, guys, and please do get some physical silver for yourself and for your family. Have a great day. Thank you so much, Andy. Take care, everyone.
Thank you, brother.